And when we, as investors, can recognize an industry evolving, we can find those undervalued companies, and we can find those undervalued companies at a great price. That just means incredible future returns for us, and this may just be that opportunity. Welcome back to Broke Finance. My name is Adam, and in this video, we are going to be taking a look at a stock that I believe is a steal of a deal right now, completely overlooked, completely undervalued. And here at Broke Finance, we are all about finding those deals because we are balling on a budget. Stick around to the very end, and you may just agree on why I believe that this stock is a great buy. The stock I'm referring to is ticker symbol FRX, but soon to be ticker symbol BODY or BODY. BODY will be listed on the New York Stock Exchange after the three-way merger is complete between fitness powerhouse Beachbody, MYX Fitness, and of course Forest Road Acquisition. There is an important shareholder vote for FRX shareholders on June 23rd, and if you don't know anything about that, then make sure you go to votefrx.com where you can learn a little more, because your vote is very important to the merger deal getting completed, and it has instructions on there on how to vote if you are currently a shareholder. In my humble, non-financial advisor opinion, and I worked in this industry for a little while, this is the only company that has a legitimate shot at taking on Peloton and actually overtaking them. Just think, Peloton is sitting at nearly $109 per share at the time of this filming. FRX is sitting around $10 per share. A price I consider completely undervalued with the potential that BODY is looking at. Folks, this is not a $10 stock. This is not a $10 stock per share company. Once that merger is completed and they start fulfilling other plans they have in this company, when they get that cash on hand, the price is going to start pushing up because our revenue is also going to push up. And so right now may be a fantastic time to pick up just a few shares and throw in that portfolio and leave alone for a little while. Beachbody is a massive company in this industry, and they are not going anywhere. They are continuing to grow, and they are growing aggressively. From our friends at Investor Place, this is what they had to say about FRX, or soon to be BODY. For fiscal year 2020, the pro forma revenue is expected at $893 million, with nutritional products being the largest revenue contributor. By fiscal year 2025, the company has guided for revenue of $3.3 billion. Further, adjusted EBITDA is expected at $532 million for fiscal year 2025. The company is targeting 3.7 million digital subscriptions in fiscal year 2021. As digital subscriptions grow, it's likely that EBITDA and cash flow will be robust. It's also important to mention that the merger is at a pro forma enterprise value of $3 billion. This would be at 2.2 times fiscal year 2022 revenue. Therefore, valuations seem attractive, and FRX stock is worth considering at current levels. Now let's get into why we agree. Why do I believe that they are still sitting at $10 per share? Well, I think a lot of it has to do with all the SPAC hate that's been coming around lately. It was the SPACs were the belle of the ball last year, but they have been getting obliterated over the past few months. And FRX, since they announced the merger, well, they're just kind of falling victim to that SPAC hate, and it's just more collateral damage than it is anything else. One of the reasons Peloton saw so much growth over the past year, aside from the Roni, that did impact it significantly, but aside from that, it's just the fitness industry as a whole is evolving. And when we, as investors, can recognize an industry evolving, we can find those undervalued companies, and we can find those undervalued companies at a great price. That just means incredible future returns for us, and this may just be that opportunity. These statistics are proving that an evolution is occurring, just like people are staying at home to work more or watching Netflix instead of going to the movies. Things change. 37% of all gym members globally have canceled or are considering canceling their memberships. 47% of all gym members won't return to gyms upon reopening. That was in March. 55% of those exercising at home do not plan to go back to their gym. 66% of all consumers say they prefer working out at home to the gym. 87% of surveyed respondents who already or will feel comfortable returning to the gym will keep at-home workouts as a part of their fitness routine. They have three key revenue drivers. One is kind of the bread and butter, and that's those digital subscriptions. Two is that connected fitness equipment that they will be able to integrate into that digital subscription, the MYX Fitness mainly being the bike. And at the same time, they have their own nutrition side with supplement subscriptions that will also be integrated into all these other things. You can see here the 3 entry doors for digital subscriptions: Beachbody On Demand, OpenFit, and MYX. Right now that is at 2.6 million paid subscriptions, which they believe will continue to grow much more over the next few years. And currently that's bringing in 450 million plus revenue in 2021. One good thing about the Beachbody content is its evergreen nature of the programs. For instance, 2 of the more popular ones in my world was Insanity and P90X. Those are still getting millions of views per year, and these were both created prior to 2010. Now the next part of that is the connected fitness equipment. MYX Fitness offers a bike at a lower cost than competitors at $12.99, that main competitor being Peloton. They have a $29 a month subscription for OpenFit or BOD. People have said this is one of the best bikes on the market, and they also, right here it says it leverages OpenFit and BOD platforms, distribution, marketing experience, and content creation capabilities, meaning that they're going to be able to continue integrating more and more programs into this bike, which a lot of people say this bike is one of the best ones on the market. Of course, the Peloton group would argue that, but there's a lot of people that are very prone to this one over the Peloton bike. And you can see the screen right there. And just imagine this. You're in the middle of a workout and you're dying. You're just completely exhausted. And all of a sudden ads start popping up to purchase protein shakes, pre-workouts, different kind of vitamins and supplements, and have them delivered to your home on a subscription basis. And those moments, I feel, which is a great marketing dynamic, but I feel like in those moments, a lot of people will take advantage of that and go ahead and make those purchases for those future workouts. The estimated 2021 revenue for MYX Fitness at a glance is of $100 million. They have more than 27,000 bikes sold, which they are expecting much higher numbers than that. And you can see here, best Peloton alternative period. Rolling Stone said it's the best exercise bike. Must have fitness gear for 2020 by Parade. They believe MYX Fitness will be the growth engine because it integrates everything into that one platform. The MYX Fitness bikes will take advantage of the Beachbody On Demand and their content. At the same time, we'll be able to sell the supplements and vitamins in that on that nutritional side. And in terms of nutrition and supplement subscriptions, the digital subscriptions that we looked at for the 2021 estimated was going to be around $450 million in revenue. Now, a small percentage of those folks that have the digital subscriptions will also have the nutritional subscriptions. We're still looking at $560 million estimated for 2021 in revenue on the nutrition side. And check out some of the celebrities that are already pushing this product and they have on board. Arnold Schwarzenegger with 21 million followers. Of course, everybody knows him, especially in the fitness world. You have Shay Mitchell with 30 million followers. And then you have LeBron James with 80 million followers pushing this product and this company. And when we take a look at the financials, and you can see them here, they are expecting a CAGR of 30% through 2025, which in my non-financial advisor opinion, could be a lot higher depending on the moves they are wanting to make within that time as they expand that operation. Because they are advertising to the world that right now they are open to taking on more products to offer for customers and partnerships and digital partnerships to integrate into that platform. They are trying to grow. Again, I just cannot see this remaining at a $10 a share stock. This could be a great opportunity out there to pick up some shares of a company that maybe you don't have the money to buy the shares of a company that's some of these super expensive shares like Amazon or stuff that's over $100. It's a super affordable share right now that's got amazing growth opportunity in the future. You're talking about a company that has got LeBron James and Arnold Schwarzenegger on board, potentially a better product than Peloton has, and it's a cheaper product. And they have the largest amount of content in the fitness world with Beachbody. There's a lot of opportunity here, and they're trying to grow aggressively. So if I were going to pick up any shares, I would be picking them up prior to that merger date. Let me know what you think in the comment section below. I'd love to hear your thoughts. Hope everyone out there stays safe. Hope your stocks go to the moon, and hope you all take care.